Hey there, Iggy the Investing Iguana here. Today, we're uncovering the dark side of income insurance shares. Buckle up because what I'm about to share might shock you. If you're an income insurance shareholder, you might be wondering how to cash out your investment. Well, I've got some bad news for you. Selling these shares is no walk in the park. In this video, I'll reveal the hidden challenges and complexities that income insurance shareholders face when trying to liquidate their holdings. By the end, you'll have a clear understanding of what you're up against and how to navigate this tricky situation. Don't worry, I'll break it down in simple terms, so even if you're new to investing, you'll be able to follow along. Get ready to take notes because this information could save you a lot of headaches down the road. Let's dive in. Imagine you've got shares in a company, but it's not listed on a stock exchange. You might think, no problem, I'll just sell my shares whenever I want. Well, not so fast, my friend. Trading shares in a non-listed company can be a real headache. Income Insurance, previously known as NTUC Income Insurance Cooperative, underwent a significant shift in 2022. They transitioned from a cooperative structure, owned by its members, to a company format. This change, called corporatization, aims to make income insurance more competitive in the marketplace. By becoming a company, they gain more flexibility in how they raise money. This additional capital can then be used to fund growth initiatives and expand their offerings to better serve their customers. In simpler terms, it's like income insurance graduating from a local club to a national organization, with more resources to achieve their goals. But here's the catch. Before the change, shareholders could easily redeem their shares at a fixed price of 10 TAS each. After the corporatization, they got the same number of shares in the new company, but now they have to find their own buyers if they want to cash out. And let me tell you, that's no walk in the park. Without a stock exchange listing, there's no easy way to see who's buying, who's selling, and at what prices. Imagine trying to sell your car, but there's no Carousel or SG CarMart. You'd have to go around asking random people if they want to buy your ride. That's kind of what it's like for income insurance shareholders right now. Income understands that some shareholders might want to sell their shares, but since income insurance isn't publicly traded on a stock exchange, selling them can be tricky. To help out, Income joined forces with a financial firm called Phillip Capital. Together, they designed the Income Insurance Share Liquidity Program. Think of it as a bridge connecting sellers with potential buyers. Shareholders who want to sell can transfer their shares to Phillip Securities. Then, Phillip Securities puts those shares up for sale on a special platform called Alta Exchange, where interested investors can purchase them. This program helps make it easier for shareholders to sell their shares if they decide it's the right move for them. But here's the thing. Only big-shot investors, the ones they call accredited investors, can actually see the trading data on Alta Exchange. To be an accredited investor in Singapore, you need to be making at least $300,000 a year, have over $2 million in assets, or have more than $1 million in financial assets. That's a pretty high bar for the average Joe. So what's a shareholder to do? Well, they could look at something called the net asset value, NAV, per share, which Income Insurance reports from time to time. But that number is only accurate at the moment it's published. They could also keep an eye out for valuation estimates from independent analysts, but those don't come out very often. At the end of the day, income insurance shareholders are in a bit of a tough spot. It's not easy to sell their shares, and it's hard to know what price to sell them at. The big lesson here? Before you invest in a company, make sure you understand how easy or difficult it will be to sell your shares down the line. Listed companies are generally easier to deal with, but non-listed companies can be a bit of a wild west. As always, do your homework, think long-term, and make sure you're comfortable with the risks before diving in. And if you ever find yourself in a tricky situation like the income insurance shareholders, don't panic. There are always options, even if they're not immediately obvious. All right, let's recap what we've learned about the dark side of income insurance shares. First, selling these shares is far from easy. You can't just log into your brokerage account and click sell. Nope. You've got to find a willing buyer on your own, which can take months. Second, even if you do find a buyer, figuring out a fair price is a challenge. There's no real-time market data, so you're kind of shooting in the dark. Third, the income insurance share liquidity program on Alta Exchange might seem like a lifeline, but it's not for everyone. You've got to be an accredited investor with deep pockets to play in that sandbox. So, what's an income insurance shareholder to do? Be patient. Consider using limit orders to lock in your desired price, and don't be afraid to seek independent advice. Remember, knowledge is power when it comes to navigating illiquid markets. If you found this video eye-opening, give it a thumbs up and share it with your fellow investors. Subscribe to the Investing Iguana for more straight talk on the world of finance. Until next time, stay sharp, stay informed, and keep on investing. Iggy out.